Welcome, everyone. This is, I don't know, a fourth or fifth presentation on this. And I think it's getting towards the end. It's kind of fitting that today, June 30, is the official last date to submit a PPP loan application, although I understand most banks have already stopped accepting them. There's still $130 billion left that on the second wave of these loans that was not distributed. And I think Congress, they're kicking around what to do with the remaining money, whether to extend it or make it available to specific businesses who have been very hard hit by the COVID shutdowns. So joining me today is Tom Hudson, who probably has spent more time than anyone I know on the PPP loans since they started way back on March 27th, which really seems like forever. There have been a lot of changes to the program since then, and I think for the most part, all those changes were very helpful to allow everyone to get full forgiveness, of these loans. There's just a little blurb on us appearing in Washington Business Journal. As I said, this started on March 27th, and everyone is pretty familiar with all that, and it seems like ages ago, even though it was only 3 months, that everyone, all the uncertainty is to submitting for these loans. And then after that was done, the uncertainty for getting forgiveness, which, changed, and probably there's still a few things we're waiting for, but it's really changed substantially since the inception.
Yeah, and just one thing to reiterate for today, John, we know there's a ton of details in this program, and we've done a lot of presentations on how to calculate it, how to do the reductions, etc. And we have that in today's presentation, but we're going to focus on really what's new, what has changed in the past month, mostly. And we're just going to run through a lot of the pre-submitted questions because we want to get answers out to everyone watching today on specific items.
And the loans, as everyone knows, is 100% forgivable, if certain conditions are met. And there's, the safe harbor that hopefully everyone will meet. And it seems like it would be pretty hard for most recipients not to have, if not 100%, pretty close to 100% of this forgiven. And what just came out, recently was if you have a loan under $2 million, according to the SBA, they will most likely not look at that, as you have been deemed to make the required certification in good faith just by applying for the loan. They still reserve the right to review a loan of any size at any time, and I believe they have a 6-year period attached to it that they could come look at it.
Yeah.
And one recent development was they are going to release a list of loan recipients, starting with 150,000, and then at certain levels along the way until until they list all the recipients.
Yeah, I think they're not going to give everyone specific loan amount, but maybe the name and the fact that they fell in the SBA ranges, which is the first one's like 150K to 360 or something like that. And then everyone under that amount, they all kind of get lumped in to a bunch of demographics is how smaller loans are going to be reported.
Yeah, I just saw a question come in about whether expenses will be deductible. That's the biggest uncertainty right now. There is a bill in Congress to allow those to be deductible, to waive the old IRS code disallowing it just for this instance. But right now, I guess you have to go along that they aren't deductible. That's the law right now. Yeah, I just kind of laugh at that because that is huge. And it wasn't the intent of Congress to not make them deductible, but it just fell in that IRS code. So really, you're diminishing the amount of loan you received if those expenses are not deductible. So we'll wait and see. And I've read a lot of positive things that they are trying to pass that bill. So the original app was released May 15th and has changed considerably since then as more guidance has come out. The revised app, and I'm hoping the final app, came out June 16th. And then second easy form was also added if you meet certain requirements.
I see some questions coming in. Right now, we're just going to run through just higher level what's happening just quickly, just to give you the lay of the land. Then we're going to go into all the pre-submitted questions. And of course, we'll be able to take any rolling in questions as they come. But we'll get to those in just a few minutes, just FYI.
So the app, it consists of a loan forgiveness calculation form that hopefully if we have time later, we'll get into the app in more detail, but it is covered in the slides going forward. Now, the Flexibility Act that came out on June 5th made some very helpful and substantial changes. It increased the 8-week covered period to 24 weeks. Loans before June 5th can use either the 8-week or the 24-week covered period. One of the biggest changes was the payroll cost ratio being reduced to 60% payroll, 40% non-payroll expenses. The safe harbor deadline was extended from June 30 to December 31. That way, I mean, if giving people time and businesses time to rehire employees, if it makes sense to do that. It extends the time to repay the loan from 2 to 5 years, and it does allow payroll tax deferral for PPP borrowers that receive loan forgiveness. It allows, it's like a total 2-year deferral, not a forgiveness, but a deferral paying those taxes.
Yeah, it's more of just a cash flow item that they're trying to give a little bit of leniency on there.
A quick refresher, the payroll costs, salary, wages, bonus, tips, commissions, allowances for dismissal or separation, vacation, family, medical, and sick leave, employer-paid health care and retirement benefits, state, local payroll taxes, that's state unemployment taxes. Non-payroll, this really hasn't changed. It's mortgage interest on real or personal property, rent under a lease agreement, and utilities as listed there. I wish they would clarify utilities a little more, but I think you have to use your best judgment when it comes to those. So the new legislation that just came out 2 weeks ago, it gave us clarity regarding cash compensation, limits spent on payroll costs for salary, wages, commissions, or similar comp, tips and equivalent, payment for vacation, the parental, family, medical, sick leave, and allowance for dismissal or separation. The comp of an employee greater than 100,000 is, of course, prorated for that covered period. So under no circumstances should you enter in Table 1 or Table 2, depending on your covered period that you elected, The 24-week is capped at $46,154 per employee. 8-week is capped at $15,385 per employee. Key definitions, quick refresher: FTE is full-time equivalent. That's the average hours worked by one employee on a full-time 40-hour week basis. Covered period, as we just went over, 8-week, 56-day, and I'll change to 24-week, 168 days, or until 12/31/20, whichever one of those comes first. Begins the day that you receive your loan disbursement. The alternative payroll covered period, APCP, 8-week, 24-week, 56-day, or 168-day. Begins on the first day of pay period after the first loan disbursement received, and you have to use that whatever you elected for all payroll calculations. The alternative period, it can be used by biweekly and more frequent payroll payers.
Okay, so just to run through this again, for the 5th, 6th, 7th time, how does this whole process work? Really is you get your loan, you're going to spend your loan on all of the eligible expenses, hopefully hit that 75, hopefully hit that 25. You need to, of course, bifurcate the non-payroll costs and the payroll costs. They have introduced this concept of those expenses need to be paid or incurred during the covered period. We've discussed this at length, really what that means in regards to timing. It's really the best of both worlds, and I think that's a general consensus that most have arrived at, meaning if you had expenses in a prior period, before your covered period that you ended up paying within your covered period, you can include those in your forgiveness calculation. And on the back end of that covered period, you'd be focused on an accrual type concept as long as the payment ends up actually being made outside the covered period. So we've addressed that multiple times, but wanted to run through it again. You need to focus, of course, hitting that 60%, very important. Otherwise, you're looking at partial forgiveness. It's not a huge deal if you don't reach that 60%, but just know that you won't achieve full forgiveness without reaching it entirely. Again, high level here, there's going to be possible reductions to your forgiveness. In short, if you didn't reduce your salaries or reduce your head count, then you shouldn't experience any type of reduction. And then you should also be able to use the EZ application, because that one kind of removes all of the reductions, and you essentially testify, or you certify that you do not have those types of reductions at all. So it's something to think about. But if you do have either one of those things, you still have until December 31st to restore them now. That was part of the Flexibility Act. They give you more room, more time. Before it was June 30th. And looking back, June 30th is today, and not a lot has changed, I know, in regards to quickly opening up, etc., and returning back to normal. We've covered the reductions a lot in the past. They are included in these slides, but we're going to, of course, try to address a lot of the questions first, and then we're going to get to those if there's time. So one of the things we've been getting a lot of questions about is filling out the application. When should you do it? Well, the latest guidance from the SBA says that borrowers can file for forgiveness during the 24-week period in the event that they have utilized all of the funds to merit forgiveness. I've seen that question pop up at least once before, or just as we started the presentation. Hey, can I file earlier than that 24-week period? I don't want to wait that long. The recent guidance says yes, you can. There are stipulations. We'll get there. You can apply, and if you were not subject to any type of reductions in salary and FTE reductions during your covered period, then you do not need to retain those same levels throughout the entire 24 weeks. Rather, now that snapshot is measured as of the time of your forgiveness application. If you did have reductions, it's more beneficial to make up any differences throughout that 24-week period. That's why it was introduced, or attempt to restore those levels before the time of your application or December 31st. So you really have 10 months before any payment is required on your application. So that's become a sort of de facto application, but per the rules, you have all the way until the end of the maturity of your loan to actually apply for loan forgiveness. There's not a lot of logic behind waiting that long, but it is there, and that's the rule. All right, let's address some of the questions that are just flying in because I've seen a bunch of them coming in and they seem relevant, at least here. The question I was talking about before, someone asked if we finish up the money before the 24-week period. Yes, we were just focusing on that. You can apply for forgiveness as soon as you've used up the funds which would merit forgiveness. There are stipulations you'll have to consider whether or not you had reductions, but if that happens at 13 weeks for you, then you can go ahead and apply for forgiveness at 13 weeks. You would simply select the 24-week period on your application, and of course the rest of it would be taken through by, of course, the date of the application, etc. So it is possible to do that, and that's been a common question, and that is something that was released in the past 2 weeks or so from the SBA, and they give you instructions on how to make that happen successfully for you. One of the things that I want to focus on here before we get to some of these other questions is, since this is a small business focused presentation, business owners have different payroll limits. The SBA had been releasing guidance related to owner employees and self-employed individuals, and this part was relatively unexpected. We've covered it slightly in the past 2 or 3 presentations, but the concepts introduce limits on compensation to business owners. In short, compensation for an owner employee is shown here. You can see it's at 8 weeks, it's $15,385, and for 24 weeks, they've increased that to $20,833, and that's what they call the cash compensation replacement concept. You'll look down below for non-owners. This means anybody who's an actual W-2 employee of the company and not an owner. Those compensation limits are different for 8 weeks and 24 weeks. So that's the cash compensation number you need to look at. Depending on your entity type, and if you are an owner, those amounts can be lower than the amounts on the screen can potentially be lower if your 2019 income was less than $100,000. It's that $100,000 amount is calculated in different ways based on your entity type. So it matters if you are a partnership, Schedule C, or if you are an S Corp owner or C Corp owner, how to calculate that. But just know that there are limits, particularly on owners of the businesses. So there's been a lot of back and forth about what's included in the cash compensation for all of these different type of owners. Cash compensation for employees has been made very clear. You know, it's all their wages, their tips, any commissions, and then it's very clear to us that we can, of course, include their health insurance payments and their retirement benefits payments. But for self-employed Schedule Cs, general partners, S Corp owners, C Corp owners, that's different. So what we can focus on here is the S Corp owner employee, for instance, they can include their health insurance as a deductible as an expense that qualifies for forgiveness. They can use their retirement. That's been made clear. C Corp owners, they can do both. General partners can include their health insurance or retirement, and the same thing happens for self-employed individuals. Though I do want to make it clear, the mechanics for forgiveness are relatively different for self-employed business owners, filing a Schedule C, and general partners. But this is the rule regarding what can be included in their compensation, and that's what's been stated, and unfortunately it's not that beneficial for most business owners. Tons of questions flying in. Let's take a second actually here and we'll address them. Someone asked, if we make a semi-annual 401k deposit, can we get forgiveness for the January to June when we make the deposit in July and based on incurred for the second deposit? So this comes back to the language of incurred or paid. If it's in the covered period, there isn't anything that suggests that this would be excluded. Assuming it's even for this year, it all seems to make a lot of sense. So any expenses that are paid or incurred on behalf of the employees, that should be eligible for forgiveness. So I'm going to go with yes. Somebody says, I'm still confused how salary reduction calculation works for the people who term during the covered period. Can you please explain? Who term?
I'm not
Sounds
sure.
like terminated, or if they leave. Just to be clear, there are multiple exceptions that are presented in the application that do not penalize business owners for employees who are terminated for cause, or if an employee leaves the organization to go find a different job during the covered period. There are exceptions for all of these different situations. One thing that I want everyone to know is that it's very important to document any of these specific situations so that you can clearly represent to the Small Business Administration that that is what happened and you have the documents to support it. And that'll, of course,
The next
allow
two,
you to
Tom,
argue that you qualify.
I think the next two questions are related, and they were just clarified. If you spend all the PPP funds after 18 weeks, but before the 24-week covered period, what date do you use for FTE headcount? My understanding and reading is that you would use, if you're good after 18 weeks, that is what you would use.
Yes, so the recent IFR says that you will use the date of your forgiveness application. And if you did not have any type of reductions during your covered period, then you should be able to theoretically apply for forgiveness and then reduce your head count or salaries if necessary.
So after the 18 weeks, if you're good, then you can, if you have to, reduce your head count without being penalized.
That is correct. And
You
that's,
don't have to wait for that 24 weeks. Unless you didn't meet it at 18 and you feel that by 24 weeks you would restore it.
yes, and then it does get more complicated if you were suffering some types of reductions at some point during the covered period. I know you don't get out scot-free on the salary reduction. There are adjustments you're going to have to make, and that's something that we do cover later on in some of the slides. Okay, I think they're flying in here. Someone just asked, can we reduce the head count once the application is filed? Yes, that is our understanding, as long as you didn't have any type of reduction during your covered period. So to confirm, someone asked, C Corp owner compensation cap is 2833. So that's something that we just covered here. If you are an owner, employee, or self-employed individual, those are the caps. 15,385 for 8 weeks, and then 20,833 for 24 weeks. And those are hard stop caps for owner employees and self-employed individuals. Somebody's asking, so the 20K limit is for the 24-week period, but we are done before like 13 weeks. So do we have to prorate the 20K? No, as long as you entirely use all of the funds for the purpose of replacing everyone's compensation and for payroll, and you don't have any type of reduction, then theoretically you should be able to easily apply for forgiveness. And then after the date of your application, you are free to reduce staff, headcount, salaries, I believe, as you see fit. You are essentially done with the process, have used the funds appropriately, and you can return to business as you feel is best for your entity at this specific time. So somebody's asking about retirement benefits. What is the cap for S Corps? The payroll limits on the previous slide. So you can include retirement benefits for S Corp owner employees. You can include their health insurance because the SBA says that's normally paid out of their compensation, so they want to separate that out. You can include the retirement, but that's also included in the cap of the amounts that we provided on the previous slides for owner employees. So it's just easier to achieve your forgiveness for S Corp owners and C Corp owners because they can include health insurance and retirement for C Corp owners, but S Corps can only include retirement. But it's just making it a little easier for them to achieve forgiveness. For self-employed individuals, they can't include these items, but as I stated before, their mechanism, and I call it a mechanism because it's purely mathematical, for forgiveness is different than a lot of the discussions that have been surrounding this entire program. Somebody said they can't see the slides, so can we repeat the limits? We will be sending out all of the slides to everyone afterwards. There is an evaluation that we send out, and as part of the evaluation, you can fill it out, give us some feedback, and then you can, of course, check to receive the slides, and they will be sent to you by our lovely Joe Kovacs. I'm just going to keep running with these questions. Everybody seems to have great ones coming through. So we'll handle these as they come in, and we'll go through the ones that we have prepared and submitted in advance. Somebody asked, as a follow-up to my salary reduction question, if someone terms and not part of the exceptions, terminates, I'm assuming, do we get penalized for salary reductions since we can't restore them since they're terminated? So there's also a bunch of other exceptions that are included in the Flexibility Act. Some of them say there are exceptions, recent new ones, as I was saying, that say you are restricted due to local government restrictions. Maybe they closed your business down due to your area, or any of the federal restrictions prevented you from getting back to the levels that you had previously, which prevented you from having all the employees and simply caused you to not be able to staff everyone and pay them with all of these funds. There's exceptions for that. So there's a long list. There's about 6, I believe, that say if you meet this criteria and it's documented and you can make the argument, then you do not suffer any type of reduction because you are in this situation. So that's overarching. I'm not sure about your specific situation, but there's a lot of exceptions for folks who were more severely impacted than others and perhaps closed down much longer than originally anticipated. More questions about the 8 and 24 weeks. Someone asked if we are, hold on, I missed one. Somebody said 401k employer, does the caps include 401k contributions for S-Corp owners? Yes, so in that $20,833 for an S-Corp owner, you can include their retirement contribution, not their health insurance. This is a very valuable slide that we have up here, which says who qualifies for what and what's included in their compensation cap. Definition of a C-Corp owner. C-Corp owner would be somebody who holds shares and ownership in a C corporation.
Is there a percentage limit on that?
I'm not aware of a percentage. I went looking for one. I didn't see one in the most recent IFR. I'm not going to say there isn't one. Everything I've seen discussing C Corp owner employee has made no reference to any percentage ownership. So that's something we'll have to follow up with and have for future reference. So someone asked if we're done by 8 weeks, which is today, June 30th. Congrats on making it through your covered period. Our FTE will lower by July 1. Does that mean we need to apply today? So that one is more complicated. You've met all the requirements of the program, and assuming you had no FTE reductions or salary reductions throughout the covered period and would not run into any reductions under the, you're kind of disregarding the Flexibility Act, and you would have qualified under the original program. My interpretation is that you can go ahead and apply. It doesn't have to be today and still achieve forgiveness without having any type of reductions associated with employee pay or head counts. John?
Yeah, no, I agree with that. If you're done today, you could apply, but you don't have to apply today.
Correct. That's my interpretation. If you
met the forgiveness today, which is your 56th day, then you're fine.
That logic of using the date of your application is more geared to folks who have a loan received after June 5th, which means that they're falling under the Flexibility Act rules, and if they elect that 24-week period, it might be too much time. SBA said we don't want you waiting around either. I'm sure they'd like to wrap a lot of this up as quickly as possible as well, and that is the intent of that logic. For you, you met the criteria and you did it right under the original terms of the program, and theoretically you could reduce your headcount and salary levels as of the end of your covered period without any negative repercussions. We have a great question here. Somebody asked, how does the $1,000 disaster loan play into the 2833? So any forgiveness that you are going to receive will be reduced by any EIDL advance amount that you received. Remember, that's $1,000 per employee, and that could have been up to $10,000. So for one individual, a business with just one employee or one owner would have received $1,000. That gets reduced out of there, so they don't want you to double dip. That's the intent of that program, and that's how that works. You don't need additional expenses to cover the $1,000. You essentially, yeah, they gave you $21,833, but you can only achieve forgiveness for $20,833. There's a follow-up question here. I may have, and it must have been about something I was speaking about at the time. I didn't catch it. So if you want to rephrase that question for me, I can, of course, address it.
Do you want to answer the questions in the slides, Tom?
Yeah, let's move on to those. We'll, of course, get to them. So if you guys have more questions, I love to help. Go ahead and shoot them into the chat, and we'll address them if we can. One of the things everyone wanted to talk about, and we wanted to talk about, is documentation. John made reference to this earlier. One of the important things to remember about the program is that you are required to keep all of the documentation related to this PPP fiasco for 6 years, because the SBA can come back and evaluate whether or not you were eligible. I imagine once they can free up some resources and hopefully things start to return back to normal and everyone starts having better days, that they would come back and perhaps look into some of these, maybe ones that had any red flags, etc. Just keep that documentation. The applications do provide a lot of detail about what they are going to be looking for. I think a lot of this could be lender specific as well. So depending on where you, which lender administered your loan, there could be different asks coming from different lenders. So if you hear of another business who's asked for this, it may not apply to you, because the banks are the ones responsible for approving these loans for forgiveness and then sending that information to the SBA saying, we approved this loan for forgiveness. So the weight is on them and their fees are on the line related to that decision. So I imagine they will do all that they can to make sure all the documentation is there. So work with your lender and keep everything as documented as best as you possibly can. Open issues, John, you have something?
Yeah, I think the biggest open issue of the whole program right now is the deductibility of these expenses. As I mentioned before, if you can't deduct it, you're, for most people, effectively reducing the amount of loan by 40%.
Yeah, this one can be argued from both sides until everybody is blue in the face, but this is the way it is right now, and that's what the IRS said it's going to be. So unless there's anything definitive that comes out of Congress that says otherwise, I know Secretary Mnuchin has commented on this specific issue, so he is aware of it, and he's arguably one of the most influential people in this process, being Secretary of the Treasury. He just has to work with Congress to get something changed here, and that's what you have to wait for. These are the rules, and we have to abide by them. Right now, you can't deduct any of the expenses that are used towards forgiveness on your income tax return, and I understand how difficult that is going to make some of these income tax returns next year. And
I think they're going to have to address it because there's timing issues too. A lot of these loans probably won't be forgiven until next year, and the expenses have already been incurred.
Yeah, and that's
I mean, they definitely have to address this.
Timing question, yeah. We have a big timing question later down in here. So let's hop into those. Just so we get
one more, there was an open issue, the floor plan interest for anyone listening in, mainly equipment, new used car dealerships who have floor plan on their inventory, is whether that interest is a forgivable cost. And the National Auto Dealers Association has been lobbying for a clarification by the SBA to know they haven't got anything definitive yet. They still feel that there's a 50-50 chance, as the last I saw from NADA, that interest expense will be allowed as a forgivable cost. The SBA definition was any interest on a mortgage interest on real or personal property, and they have not clarified at all what they consider to be personal property. So
yeah, I know that one is near and dear to the heart of Mr. John, because that one's a big expense for him and a lot of the people he works with. So clarification there would be very much welcomed by him and some of his associates. So some of these questions, let's run through them. Thank you guys for submitting these in advance. It gives us the opportunity to read it, understand it, so we don't have to always think on our feet. But question one, someone asked, if we choose an 8-week window Do we have to submit the application for forgiveness on the 56th day after receiving the money that week, or do you have a certain amount of time? And who do we submit it to? Is it to the SBA or the lender? Great question. Just want to get out ahead of this, but you have 10 months, as I said before any type of payment starts. So that's kind of the de facto deadline or due date for the application. Otherwise, payment will start. That's not a drop dead date, so you can apply after that. But just know you're going to have to start making payments within that window. Also, you do have throughout the entire maturity of the loan, so you can either have 2-year or 5-year maturity. 5-year would be, of course, a little more beneficial if you're facing cash flow issues, but you have that entire maturity to apply for an to actually submit a forgiveness application. The lenders, after that, the process is you're going to be submitting this application through your bank. A lot of the banks are saying right now, hey, we're not ready yet, because it's very early in the process. There's a lot to be handled here and to be sought out, so don't be mad at them yet. But you can't, unless your bank is open for application, you're going to be working with them, and I assume that they're going to all have their own different methods for communicating with their clients and recipients of their loans as to how that can be administered. It's probably through some online portal. It's something like that. But the applications that you find on the SBA website are available. You can look at them, and that's the information that you're going to be providing to your lender. So if you want to get ahead of the curve, you can go ahead and get prepared as best as you can. The lenders have 60 days to arrive at a determination for forgiveness, and then SBA has 90 days to review everything and ensure that the procedural protections that they are looking for are there before they remit the funds to the lender to satisfy the loan. So your lender will tell you whether or not you applied for or whether or not you achieved loan forgiveness and what amount was reaching forgiveness. So they will give you the definitive yes or no, and how much was forgiven. So that'll be coming from your lender. Next question. I'm going to watch this here. Okay. If there's anything, John, that pops in that's relevant to the question I'm discussing, just if you could let me know, that'd be wonderful. So second question, will the health insurance for S Corps be considered wages and therefore part of the limit? So we addressed this earlier on the other slide that had the different types of owners. The only amount that can be included in the compensation cap for S Corp owners is their retirement contribution. So the health insurance is not eligible for forgiveness for owner employees of S corporations. This is a great question too. Somebody said, hey, I came to one of your prior presentations and it was stated, thank you for attending by the way, it was stated that businesses that have been severely or adversely affected by stay-at-home orders, and we did say restaurants, they brought that up. The new PPP loan forgiveness process should ease the minimum FTE coefficient ratios. The new forms provide a checkbox for businesses affected by CDC guidelines, but say nothing of state-imposed restrictions.
It appears they specifically left that out for a reason.
Well, in the latest IFR, there is an example that focuses on state and local restrictions, and in that example, they say a local government did shut down a business, and they mention that would qualify under this specific exception. So that's relatively new. But for all intents and purposes, it looks like there's a big other at the end of this exception as per the IFR, which is a separate guidance that came out. It's a boring read, but that does come out and says state and local government mandates that affected your business do help you qualify under that specific exception. So that is our interpretation at this time, and that's what it's looking like per the guidance released by SBA. Further, this person asked, well, how does an affected business, someone who would meet this exception, ensure that our FTE coefficient would be treated as 1 and not 0.75 or any other value? And really, how does this all work? Really, if there are any FTE reductions when you're doing the math for all of your employees during your covered period and you're in that section of the application, there will be mathematical reductions, but you are able to come in and say, well, I met this exception, and that's my argument, and therefore are not impacted, and you essentially remove those reductions from the FTE count. So that's how that's going to work. They're going to say, hey, if you had reductions that you couldn't overcome due to restrictions imposed on you by federal, state, local governments, we're not going to penalize you. And that's the final word.
Can we apply for a second loan when the first one has been entirely spent? No, you cannot. As I mentioned earlier, there's 130 billion unused funds, and Congress and the legislature is discussing ways to use this money. And it did mention that it would that if you did receive a PPP loan, that they would not preclude you from getting additional funds. But for right now, the law is no. But they want to spend this 130 billion, and they seem to want to target the industries that have been particularly very hard hit by these shutdowns.
Yeah. So right now, the answer to that question is no. You can't go back and get more. I think it might be worth your time to perhaps focus on that new stimulus bill that they're talking about coming in the end before the end of July. Maybe that has, and I'm entirely speculating my own opinion, maybe that has a new PPP related portion focused on what John's talking about, maybe the more impacted industries. We're going to have to wait and see, but it'll be fun nonetheless. 5, next question.
I don't know what you're thinking is pushback from the SBA. I think your application goes to your lender and then to the SBA, as long as you do it in good faith and try your best effort to get it right. I don't anticipate any pushback from the SBA unless it's totally wrong.
Yeah, as I said before, the bank, their own fees related to this, unfortunately, are tied to the accuracy in which they review these loans. And let's take this to a higher level right now. Everyone wants these loans to be forgiven. That's the point of the Flexibility Act and why Congress was like, they said, we want everyone to qualify for forgiveness as much as possible. So really, I think they're out just for folks who maybe misuse the funds or were doing something wrong or unethical with the money. Otherwise, I think everyone here is on the same team. We want to get people paid and we want to get it forgiven. So documentation is key, and I think that's really what the banks are going to be focused on. So that's the insight we can provide there. Maybe speak with your bank representative if you have them readily available, although I'm sure they're super busy, just as we are with getting everyone through this. 6, somebody asked, what is the maximum amount of compensation for a sole proprietor, Schedule C? Owner comp, $100,000 can receive through PPP. Was $15,384 before the expansion to 24 weeks. So that was on our other slide. It changed for Schedule Cs. And remember, they have a different mechanism for achieving forgiveness in that it's relatively automatic. But since they introduced the Flexibility Act, debt is increased to $20,833 for Schedule C owners. So you are correct. It was $15,384, and if your loan was for a higher amount, you could achieve forgiveness by selecting the 24-week period and, of course, getting the money to yourself over that longer duration of time. 7, multiple PPP regs have changed. This is the question, and one of the changes permits small businesses owners to include their salaries in the PPP calculation, where that was originally not the case. My company could stand to receive an additional $40K if partner payments were included in the calculation. Is there any opportunity to submit for this additional PPP money? This is just unfortunate because there isn't a way to go back and edit your application and perhaps receive an increased loan amount once you accept it. It is as good as gold, and you need to move forward with that. But just understand that this rollout was certainly bumpy, and specifically general partners and partnerships were kind of taken for a ride in that it looked like initially they weren't going to receive any compensation for themselves, but then there was guidance later that said they actually can, and unfortunately there was nothing retroactive that could get you that money for someone who is in the circumstance similar to yours. So unfortunately, no, there's nothing you can do, and that's really just a flaw of the program and a testament to how it got implemented. 8, for a fiscal year entity, and this is a great question. Everyone pay attention if this is you on a fiscal year. If your year end falls in the middle of the 24-week forgiveness period, is there any additional guidance as to when during the forgiveness period they are required to start counting forgivable expenses? You are in a tough position. We would love an answer to this question too. There hasn't been guidance. It's looking to be quite a difficult situation you're going to have to maneuver through regarding getting that income tax return filed on time, and then also sorting out your forgiveness across the fiscal years. You need to wait for an answer, I think, is unfortunately the best we can give you at this time. And I'm sure the SBA is aware of these odd problems, but they have such a backlog and so many different questions they're trying to answer. I imagine it's coming. Somebody's asking about the EZ form. So that's one of the newer applications that was released, shorter, easier to do. Somebody asked about, why is it asking me the employees at the time of the loan application? Does it mean FTE or number of employees? So this one just asks how many people are employed by you. It's purely informational. It doesn't have anything to do with the calculations in the rest of the form. A lot of people have speculated what exactly the SBA is doing. I think they're just collecting data, and that line is more associated with that. It doesn't have any other impact with your forgiveness. But the FTE counts and the process that they take you through later in the application, that does have impacts on your forgiveness. But these are two different numbers, and that first one is purely informational, and I believe it's not using that same FTE logic. You just have to tell them how many people are on your payroll at the time of the application. Next question, if we let people go in the 24-week covered period, but have the head count up to the original level on December 31st, do we pass the safe harbor test? Yes, that's how that works. They are saying the Flexibility Act extended the amount of time from June till December. That says we're going to give you more time to weather the storm and get people back on the payroll. And as long as you get back to your levels by December 31st, that's the drop dead date, then you do qualify for that safe harbor, and you would negate any reduction you had for FTE reductions during the 24-week cover period. And of course, December 31st, that's the last possible date. As we've mentioned before, you can apply for forgiveness earlier than December 31st, and you can meet that safe harbor earlier than December 31st using the date of your application for forgiveness. Next question, somebody asked, our loan was based on 2019 numbers. However, a lot of people were let go at year end. Is the head count still based on February 15, 2020 numbers? There's multiple other windows throughout the test that could account for this type of change. There aren't enough details here to address the situation accurately, but you could theoretically possibly replace those employees if possible, or you could rely on the safe harbor or exceptions to justify any of the decrease. Otherwise, if all else fails and you don't meet an exception and this was just how it worked, you could return the funds with no harm, no foul. So that one depends on a variety of factors, and those are your options. Look at the exceptions, look at the other time window, look at what was factored into your calculation. So just know that there's a lot of options in the program that try to account for situations like those. All right, let's address a lot of the questions here on the side. Those were the majority, actually all of the pre-submitted questions that we had that we could incorporate into the presentation. But let me hop up here, see where we left off. Tons of questions.
I'm not sure where we left off.
I've got it right here. Somebody said, we received our loan in May and we had 76% usage for compensation. That's good. You're over the 60% at 8 weeks. If I include one additional payroll at 10 weeks, we could use approximately 100% for compensation and be 100 forgiven. Does that sound correct? Yes, that's entirely possible. The way this all works out is it's hard to fit everything into that 8-week window. Normally 10 weeks was a sweet spot that a lot of people were saying that allows me to get it in there. You have to look at the rules regarding when everything was incurred or paid. you could qualify under the 8-week window. Otherwise, it's perfectly acceptable to extend and use the 24-week period, and of course submit your application in advance, and then of course use all of the funds for compensation. You don't have to use any non-payroll costs in your forgiveness calculation. 75-25 or 60-40, excuse me, 60-40 are minimums. They're floors. So if you use all of the funds as cash compensation, that's great, and you still can qualify using those terms, and should be good to go.
The next question is, what if you pay rent and record it on a 1099 but don't have a written lease? I would make sure you have a written lease because it specifically states it has to be under a lease agreement.
Yeah, that is specified in a lot of the SBA guidance and the interim final rules that they're looking for a lease. So you may have to tread carefully there. Somebody's asking regarding the payroll tax deferral. ADP doesn't have a way to prepay this at the end of 2020. Any idea how to handle this? I can't speak to this or any troubles that ADP is having. That's something you're going to have to work through with them. We have some folks who are very well versed in payroll. If you reach out to us, maybe someone in any of those departments or more intimate or who works with ADP on a more regular basis can probably answer that question, but I don't have an answer unless you do, John.
No, I don't.
No.
I'm not sure.
Yeah, that's something I can't address here right now. Somebody said, so less than a 1% shareholder of a C Corp would be considered an owner. Again, I want to go double check if there was a minimum percent C Corp shareholder in order to meet this criteria. I'm leaning towards they would be considered an owner employee, but I don't want to lead you incorrectly. I can't say that with 100% confidence. So that's something we can follow up with if you want to reach out to us or me, and we can make sure to get you an answer. Our contact info is at the end of the slideshow, and of course they'll be provided if you can be so wonderful to submit a little feedback for us so we can improve these presentations. Next question, when an owner employee of an S Corp gets a W-2 at year end, which limit applies for a 24-week period? I'm not sure I follow the question entirely. Maybe you're talking about what amounts are going to be reported on those W-2s and how that interacts with the deductibility of those expenses. The W-2s are going to be reported as they are every other year. There's not going to be any changes on those. And so if you would include on the W-2 the payroll costs that were paid to all employees, regardless of whether or not they were used in a covered period and associated with forgiveness. If I misunderstood you, go ahead and submit a second question, and we can come back to that. Somebody asked, can we choose which salary amounts to include? We have a government contract that we can charge salaries to for the first month and want to use the remaining week's salaries for PPP. So this is something that was covered in our not-for-profit presentation earlier. And I know Pat Drolet and Judy were all over this specific issue in that you can't double dip using these funds. If you're a government contractor and you're under a firm fixed price contract that includes salaries, you might run into issues using PPP funds and how that interacts. I'm not as in tune with it. What I've taken away is that you cannot double dip, meaning you can't receive forgiveness for funds that you got reimbursed for by the federal, or I'm not even just going to say federal, I'm going to say all government entities. So that's something that you're going to have to look into specifically. If you want to get in contact with us, I can direct you to folks who are more in tune with that specific issue. But this one is more so focused on small businesses and the troubles that they may encounter throughout their process with the PPP. So next question, somebody said, is the salary reduction forgiveness person to person? Yes, it is based on individuals. So when you do all of these calculations for FTE reductions, you're looking at each individual employee's hourly, how many hours they worked per week in the covered period, their average hours, and then also their specific pay compared to the beginning quarter of the year. So to follow up on the question, if I had 20 employees now, but I have 10 that did not reduce the salary of 10. Would I qualify for full forgiveness? It depends, because the salary reduction is greater than 25%. So if you reduce their pay greater than 25%, you may potentially run into a reduction. But those safe harbors are available to you. The December 31st date is something you can look at for a way out of that reduction. But it is employee to employee. So if John or employee A received a pay reduction beyond 25%, you may encounter a reduction. And that you have to do that for everyone who's on your payroll. If you have a provider, I know they all have a lot of reports that are very beneficial and help you through a lot of this logic, much easier than it would be if you had to go back and really check the books. So if you have a provider, definitely check with them. They may give you a real easy shortcut. I know a lot of them have reports ready for this process, and kudos to them for doing that, because it's a lot of work. Next question is safe harbor and profit sharing for 2020 that's paid in 2021 able to be included since it was incurred during the covered period? That one is a difficult one. I know that we've run into this question before because it is incurred, and the logic of incurred or paid does say that any expense incurred during the covered period can be included, as long as, and what they're focused on is that the pay, the scheduled date does actually happen down the line. So if this wasn't eventually paid until 2021, you're kind of opening up yourself for a longer time frame than I think and it would kind of eclipse the whole intended time frame of this program. I know we came to some sort of, this has been answered different ways. I don't want to give you the wrong answer. I think
that was your practice all along.
Yes.
My understanding is that would be allowed.
That's what I want to say. I think it should fall under the accrued, the specific portion associated with them. But I just know that since it's not paid until 2021, it could present an issue, and that's what I'm focused on. But I believe it meets all the criteria set forward by the program now, and it would have to have something that explicitly prevents it, in my opinion, because I think it meets the requirements. So I'm leaning yes, but of course this is just us trying to help you through this, and it may not be the entirely correct answer.
The next question is kind of the same issue. We pay employees twice a month. Payroll for the work on the last half of the month is 15th of the following month. Is the covered period the period worked or the payroll date? The covered period would be for the period worked if this is on the back end of your loan forgiveness period. So if that covered period falls into the 24 or 8 weeks, then that would be allowed, even though it might be paid after that covered period.
Yeah, focus on the language.
Practice, and that's how you always have done it.
I agree. Somebody's asking about line 7 and line 8. We probably have 95% for payroll. I'm thinking back to the application, and I think I know exactly what you're talking about. If you use 95% of the loan for payroll, then you're just going to go ahead and fill out the form as such, using those amounts as you spent them. So I believe that's acceptable, if I'm understanding the question. I'm trying to scroll through. I have the application here, but I think I've got it down. Somebody said, next question, can you use 100% on payroll if your payroll is 2833 or more in 24 weeks, Schedule C sole person? Yes. So that's one of the things that makes this easier for Schedule C folks, is that before, if you received a loan that was 2833, that could have included utilities or rent payments or home office deductions that you included on your form, you can really just shift how you spent the money and use it all as your cash compensation, and that would qualify for forgiveness. You wouldn't have to go through documenting or claiming any utilities or non-payroll costs. What happens if you? Yeah, go ahead.
If you file for forgiveness for 8 weeks, but find out some of your expenses are not forgiven, would you be able to file forgiveness for a longer period to get 100% forgiveness? I don't remember this being addressed, but I don't think you could. If you select 8 weeks, I believe that's what your what you've elected, and I don't think you could change that. So I would, if you're not sure, I would wait and take the 24-week covered period. Have you seen anything addressing that, Tom?
No, and you should be able to know based on your own calculations and filling out the application what it's looking like. So I would, if you're unsure about something, I guess maybe that's how it could arise. If something you thought would qualify didn't, and that came from your bank, maybe you can make the change or correction. I don't know. I think that's up to the lenders. We'll have to see. I haven't seen anything that says yes or no on that. Just so everyone's aware, we're coming to the end of the allotted time. We're going to stay on and at least answer as many questions as we can for the next 5-10 minutes. So if you're interested in some of these answers, you can hang on, and we're going to do what we can. For anyone else who needs to hop off, we will send this out if you go ahead and fill out that survey and check that you would like to receive the slides. And thank you for your time. Somebody's asking, I saw C Corp health insurance is allowed but says it's capped. Does that mean it's part of the 20K? Yes, that is the correct interpretation. It's included in your cash compensation cap at the annualized $100,000.
The question before the 24 weeks is the default. Hope that answers that one.
Oh, yes. If you received the loan before the Flexibility Act came out. So you select your time period when you fill out the application. So there's 2 checkboxes. You put 24 weeks or 8 weeks. You don't have to go to the bank to change that. The only thing that you have to go to the bank to change in your situation, if you had a loan before June 5th, is the maturity date. And you have to work with your lender to switch to 5-year loan. If you find that you may be paying some of it back, you are able to do that. And that's the only thing that wasn't automatically changed. Everything else was automatically enacted and available to everyone. Somebody was asking, this is related to when we were talking about the exception. If Montgomery County, Maryland told you to stay home and that affected your business, can you qualify? So that is what the IFR indicated. And that is the guidance from SBA that said if there were, it was in the example that they provided that said a local government shut down their operation, you would have an argument under that exception, which would alleviate any reductions that you had related to FTEs and salaries during your covered period. So that's something you're going to have to look into. I know there's a lot of developing pieces and moving pieces related to that. I hope the SBA comes out with more clarification as to how that's going to work, because right now all we have is kind of that vague exception, and it's not clear what they're looking for related to that. But people have speculated that that could include, financials perhaps that show your business has decreased. I'd hang on to any emails or letters that you received that from that local authority that said you have to close down, because all of that is going to be important in substantiating your claim.
I think there needs to be some more clarification by the SBA on that issue.
Yeah, it's very vague, and understand that they all want these to be forgiven, so hopefully they come out with favorable just details and specify what they're looking at. Somebody asked, will we be updating the PPP loan forgiveness tracking sheet? Thanks for bringing that up. We do have a tracking sheet, and it is available on our website. I actually have a copy of it right now, and we're just testing it out to make sure there aren't any kinks in it, but we will be releasing that one relatively soon. So keep your eyes peeled, and hopefully we can get an email. Maybe Joe can send that out, informing everyone that our new sheet is available. So coming in the next few days, definitely. And that tracking sheet, for those who don't know, gives you a good Excel platform to really run through a lot of this math associated with the application, and gives you an easy way to get this done. Next question, if we file for the application early, like 14 weeks, is the forgiven amount of owners prorated, or is the full 20K allowed since submitting before the 24 weeks? So I imagine that's talking about the Schedule C mechanism. And because they're so different, I don't think you can apply early in that scenario. I don't know the answer to that one. I haven't thought about that.
I'm not sure either on that one.
Yeah, because that one is so different in that there is no movement of funds. Theoretically, how that works is Schedule C people just achieve forgiveness based on the math, and you could apply for forgiveness on day one because you're going to get it. That's the way that works. So how that works with the timeline, I don't know. That might be lender specific if the SBA doesn't specify. Joe chimed in and said our sheet will be available. Somebody said, I'd like to repeat the question. Does that mean it's part of the 20K? So if you are an S Corp owner, C Corp owner, and the slide indicated that it's included in the cap, it said yes cap, that means it's included in the total amount that was provided on the slide before, which is the 20 or the 15, depending on your covered period. So yes, it's included in that, but it's just making it easier for you to achieve that full amount of expenditure through your salary and either your retirement or your health insurance. Somebody said, will solo 401k retirement contributions be forgiven? So if you're Schedule C, your retirement contributions aren't included. Your mechanism for forgiveness is relatively automatic, and depending on your loan, you should qualify for forgiveness solely based on the fact that you are Schedule C and you use that mechanism for forgiveness. So you can use the funds as you see fit, whether if that's cash compensation replacement or you end up remitting it. There are no requirements over how to actually move around the cash that Schedule C owners use. There's been speculation, but I don't think anything firm from the SBA that said what you have to do with it in order to qualify. Follow up on the W-2 question, where an owner employee of an S Corp gets a W-2 is the payroll limit for 24 weeks 2833. It's the 2833. So the 46,153 limit, that applies to people who get W-2s, but that's for non-owner employees. So because you are a shareholder and owner of that S corporation, you are subject to the employee owner limits, which is the lesser amount, unfortunately. As we said, this one was out of left field. It wasn't expected, and it's a detriment to business owners, especially ones that maybe had a down year last year, because they will be subject to 2019 limits based on their income last year. Question 7 and 8 on the EZ application makes it sound as if only 60% of the payroll costs will be forgiven. Reading this incorrectly. So that's a floor. I want to be clear that that's a floor. So if you spent 100% of your funds on payroll costs, 100% of them will be forgiven. 60% is a minimum they wanted to see as part of the rolling out of the program. Initially 75, Congress changed it to 60. So,
so allocate the next, is there any advantage to how you allocate the money?
Don't know. I think only
100% and reach 60% payroll. I don't think it matters.
It doesn't matter. I think it would have to do with documentation. If you can do it all through payroll, you're sending less information, and that's the only benefit I can think of. You know, you mentioned home office, self-employed. What portion of the home office is forgivable? So that's included in the calculation for them. That has to do with the loan calculation amount that you had before. If that was factored in, those expenses under home office as non-payroll costs in order to achieve forgiveness, then you can go ahead and use those. And it has to be in tune with the same percentage that your home office was, I believe, in the prior year. And if they were claimed in the prior year, there's a lot of references to what you did in the prior year. So I don't think there can be anything new, but it's all of those expenses. They can be included. Again, the mechanism is different for Schedule Cs. It all depends on how your loan amount was calculated, which could be different for everybody based on when they applied and how the lender interpreted it. So there's not a uniform answer, but you can utilize those expenses on Schedule C for folks who own a Schedule C and are applying for forgiveness. Just a few more. I know there's a ton of questions, and we're doing the best, but we have limited time here. So just to wrap it up, does health insurance as part of the compensation cap apply to non-owner employees? No, it's so that cash compensation, to be clear, is the actual cash that they receive, which includes their wages, which includes their tips, bonuses, actual money paid to them, and of course their own federal and state withholding. And then separately, you can include the health insurance for non-owner employees. So that's in addition to 100K of money into their pockets. So somebody's talking about, let's finish up with this one. This one's a good one. Loan forgiveness is based on 2019 salaries and benefits for C Corp employees. What happens if some of those employees are terminated at the end of 2019, not replaced when you file for forgiveness? Do you recommend to just extend the forgiveness period? That is one way to alleviate that problem, in that you're able to utilize more of the funds by spreading them out to the employees that are left, over a longer time window. So that's an option, and that would be something to get you through that. I understand that there's complications with the way this is implemented and calculated and determined, and that is one of them. But that was part of the purpose behind the Flexibility Act.
Tom, the last three questions are pretty much the same. We might as well address those. Earlier question was on prorating the 20K on a corp if we file the app in 14 weeks. I think you're okay with the 20,000.
Yeah.
Because you're using the 24 covered. If you're using 14 weeks, you're under the 24-week covered period. So. And
I think they may be getting mixed up where I was talking about Schedule C's, because they're not actually moving the money. They're not paying anybody. A C corporation, if you used up the funds through payroll and giving it to the C corp owners, the 20K, or even non-owners, if you do that within 14 weeks, you can go ahead and apply for forgiveness. So that's something that you can go ahead and jump on. 24 weeks.
I think that covers all the last questions then.
Everybody, just overarching, it depends on your entity type. It's different for some of you. So C Corp versus Schedule C versus S Corp owner, how that interacts with the extended time periods is different for everybody. Anyway, okay, so behind this, we have tons and tons of slides about how this all works and walks you through the actual presentation. Again, please fill out that survey and we'll get this copy to you, and that should give you more information. I hope we were as helpful as we can be. This is all very confusing and we're trying our best to understand it as best as possible. And we know a lot of you are out there trying your best to understand this as well, just so you can do what's right for your business. So if you guys have any questions, feel free to reach out to us. We're really making a significant and concerted effort to help anyone that we can with this process. Because we understand how it is right now. So with that, we're going to conclude today's presentation. Thanks, John.
Thank you very much, Tom. Thanks, everyone, for listening in, and have a great 4th of July.
Yeah, I hope everyone has a great long weekend and a wonderful 4th of July, and good luck to all of you.